Hey everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 on May 14th, 2014, and we're going to take a look at the S&P chart. Before we do so, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, guess what? We're still looking for that close over 1900. Did not get it today. As a matter of fact, the markets were down a bit, pretty much across the board. And, we saw a couple of potential reasons why this might happen, and it did. Interesting to note, if we look at where we had our trend lines drawn on today's chart, let me go to a 10-minute chart. There we go. We bounced right at our sort of average support line that used to be resistance. And that's at about, currently I think it's about 1885. So kind of interesting to note that that is where we at least found something of an initial bounce near the end of the day today. You could see that we started out with weakness, formed a, here's where we can move into a smaller chart, a smaller time frame. Let me go ahead and kill these moving averages. You can see that we came down today and then we formed a little flag pattern right here in the form of a triangle, and that broke. You can see the initial break right there, that little tiny red candle. Then it pulled back a little bit to that and then started to head down. Now this very small pattern really doesn't have much of a target at all. It's only the height of this pattern. So, we're done with what we would expect from this very small triangle. But let's take a look at the last 2 days trading and see if we can make a little sense out of what has taken place after we hit this top up here, short-term top at a roughly 1902. First off, you can see that our tops line up pretty well. So let's make that blue. Then if we take a look at the bottoms starting here, they also line up fairly well. So, as a matter, not only do they line up, but not quite parallel. We're getting a little bit wider down here, which, believe it or not, you may look at this and say that's a bad sign. That's a sign of weakness. Maybe not, because often when you break underneath a little bit, when you break underneath a descending channel, sometimes that's a little bit of a sign of longs throwing in the towel, which often happens near a bottom. So let's see if we get support continued bounce tomorrow, and if we do, let's see if we can get over this top line, which I think is fairly well established with 1, 2, 3, 4, 5, 6 touches. I mean, if we look at the little ones that we had just today, we had 1, 2, 3 after lunch. We had one, I'm going to call this a touch right here, and then at the end of the day. So I think this is a legitimate, excuse me, this is a legitimate line of resistance. When we get over this line, we will likely should be starting a new leg up. So for right now, it just looks like a little bit of weakness after we hit 1902. Not quite ready to head up over 1900 with that close. Here you can put it into perspective again. One other thing I'll do just very briefly is if we go back to this high back in early April, and we snap a line over the highs in early May, we closed just a little bit over that line or right on it. Additionally, and this is not something we need to keep on the chart. Additionally, if we come into a 10-minute chart and we were to look at this level right here, that lines up almost perfectly. So we take the high of the 2nd of May, the high on the 8th of May, and if we say that that is kind of maybe some type of resistance line that got taken out, we bounced there today. Now, since we had that gap up on Monday, if we were to come down and test this level down here at about 1878, that would not surprise me, but we might not. I'm not a huge believer that you have to close a gap. I just don't think that's true. But when you do end up closing a gap, you often will get support when you come back to close that gap. And we've talked about the reasons before. It's because there's a psychological tendency for people to feel like they missed that move. They said, somebody sold here at 1877, 1878, and then they saw the market put on a quick 24 points, and they're like going, oh man, I missed that. So they're lying in wait now, potentially thinking if we get back to the high 1870s, I'm a buyer because I missed that move. I want to be a part of the next one. So that is also a possibility. But for right now, we are again over 1884. That's a good thing. This now marks 1, 2, 3 days closing over 1884. If we go back and look on the chart before, we had I think we had 2 consecutive days back in early April. Maybe we closed over it on the first. I'm not positive. But we've been over this line before, just couldn't hold on to it. You could see what happened when we tried that before. So guys, keep your fingers crossed. We're sort of in the same situation as we were yesterday, but with the added emphasis on the fact that we are now seeing enough points on the chart for us to know where to look for a potential turnaround on this little 2-day skid. So let's just keep our fingers crossed, see what happens tomorrow, see if at some point during the week we get over this line, because when we do, I think we will likely come up and we'll get our close over 1900. So there's your video for May 14th, 2014. Hey, thanks for taking time out of your day to watch this. Let's stay on top of this together, see what we get. Tomorrow and Friday, maybe we're going to get that close over 1900 that I know I have been looking for. Take care and look for tomorrow's video. Again, it's Thursday. Tomorrow's be Thursday. Try to get the video done and posted before 5 p.m. Take care. Thanks.